5K Snipeathon is a public trading journey where I'm going to grow $5,000 of my own money to $10,000 trading currency in the foreign exchange market. This is a completely public and transparent trading journey where I give daily and weekly updates of the progress. If you want to follow and stay up to date on this trading journey, make sure you hit like, subscribe, turn the notifications on, and look in the comments to join the Snipers Anonymous broadcast where I update the chat daily on the progress of the account. Shalom, shalom. Welcome, family. Before I get started, I just want to give all praises to the Most High God of Israel for no particular reason other than the fact that He is worthy to be praised. I've gone back and looked at, some of the videos of the weekly updates, and I have not been given credit and praise where praise is due. So from now on, I have to start every single call praising the Most High, because if it was not for our Creator, I wouldn't be here right now. I wouldn't have the skill set that I have. I wouldn't have woke up today. Nothing would be possible without Him, and He is deserving of all the praise, and He loves to be praised. So all praises to the Most High God of Israel. So now we can get started. I feel like I opened up this call proper. And welcome to the 5K Snipeathon weekly update, week 21. Let's go ahead and get into the results of last week. So last week we had a starting balance of $5,009.60, and we ended the week with $5,009.70. So gained 10 cents, and I'll explain what happened. So we actually had a win last week, and that win ended up another trade that I took yesterday. When the market opened, I went for a buy, and I lost that trade, and I just included it in this update. So I counted that as last week's trade, but went 1-1, and so we just gained or lost 10 cents. So the win rate was 50%. There are no open trades running, so no open profit or a loss. And the net profit so far has been $9.70. As you all know, everybody who's been following, we've been pretty much consolidating. So, but as of now, we are in profit. And the notes for this week is NFP results. So that's something that we're going to go over on this call. NFP results. We talked about what we expected the market to do last week, and we're going to go over and game plan what we're going to do based off of what happened last week. And then this week's focus is, where's the liquidity? All right, so let's go ahead and get into it. First things first, we always go over the forecast for the week as far as news and what days we should be looking for volatility. So give me a quick second, and I'm going to bring that up. While I do that, how was everybody's weekend? Does anybody have any testimonies? Anything that they're grateful for? Anything that you can share with us? Positive about something that happened, during your week or over the weekend. All right, let's go ahead and make this full screen. All right, here we go. All right, so last week we had NFP, and what we're going to be really paying attention to this week, what we're going to be on the lookout for, is Tuesday. So tomorrow at 8:15 in the morning, or I'm sorry, not Tuesday. Tuesday is ADP employment change, which that's going to play into FOMC minutes, which is on Wednesday. So I want to bring your attention to FOMC minutes, which is going to be on Wednesday at 2 o'clock in the afternoon, Eastern Standard Time. The reason why this day is important, the reason why FOMC minutes is important, is because they're going to be discussing, officials with the Fed are going to be discussing plans for either rate hikes or rate cuts based on non-farm payroll information, based on, employment, inflation rates, things like that, the job market. And they're going to basically be giving out hints to what they plan to do with interest rates for the rest of the year. Now, the reason why this is important is not because we can tell what the market is going to do, but it's important because it's based on the speculators who are going to be watching this, and depending on what they say, this could really cause volatility in the market. There wasn't too much volatility last week, even with non-farm payroll, but I have a feeling that Wednesday is going to be volatile. And the market is really divided right now on what the dollar could do as far as it being bearish or bullish, and whether the Fed is going to, increase rates or cut is really divided. People don't know. And so when uncertainty is in there as far as the market sentiment, I'm thinking consolidation. I'm thinking range. I'm thinking price is going to trade in between this range versus, okay, we're long-term bullish, long-term bearish. And so we're just going to keep that in mind. But Wednesday is going to be an important day. We're going to be on the lookout. We're going to go over some areas where I see liquidity. And yeah, that's that. I really wanted to shed light on that, though. Just be on the lookout Wednesday for everything that's connected to the United States dollar. And then after that, the next major news releases is going to be on Thursday. For Europe, we have the balance of trade that's going to be at 2 o'clock in the morning during the London session. And then at 8:30 in the morning, we have jobless claims, initial jobless claims, continuing jobless claims, and then existing home sales is going to be at 10 a.m. So that's going to be another day where we can expect some volatility during the New York. And then that's pretty much it for the week. So the highlight of this week is Wednesday. We really want to be on the lookout Wednesday and Thursday morning. You got the FOMC minutes on Wednesday morning, and then you have jobless claims and home sales Thursday morning. Okay, so let's now go ahead and get into what we went over last week and what happened, like what happened last week, and what that looks like now for this week as far as what we're going to do. And let me check the comments real quick. Sorry about that. Okay. All right. John said, I had a blessed weekend, family together time with my in-laws, feeling blessed. All praises to the Most High. John spent time with his family. That's always a good thing. Especially in the times that we're living in. It's good to be in the moment. It's good to be around family. So all praises for that, man. Thank you for sharing. So last week, we always talk about the dollar, right? We always go over the dollar index first. And I went over something with a student yesterday in class. And so we're uptrending right now, right? Technically, now this is based off of what we know about market structure and market structure rules. We have a low, we have a high, we have a higher low, and then we created this higher high, right? This is looking at this from the higher time frame. And now after this higher high, we're starting to pull back, right? I want you to take a mental note of that. We're going to drop down to the lower time frames and see what happened last week and why I expect what I'm expecting this week. All right, so let's go. Last week was during this time. Okay, so last week we talked about this high being taken out, and we had a sell zone up here. Price didn't reach quite up into the sell zone, but it did make a run for it, and it ran above this high like we talked about, right? And from there, price rejected, and it created market structure, and it broke structure, right? So we came down, created a low, created a lower high, and then we made a lower low, breaking this low, and even breaking out of the range or the bottom of the consolidation. We came back up into another sell zone, sold off, created an intermediate high, and this is what I went over yesterday. So this was the market open, or I'm sorry, not the market open. The market open was here, but this was the high that was created last week. And so yesterday I was expecting this high to get taken out, which we see it has, right? So this high has now been taken out. I was expecting the dollar to be bearish, and that's what happened, right? We came up. These are the sell zones. We came right below this sell zone, and then we had this sell-off right here. So here's why I believe the dollar is either going to stay within this range this week or start to sell off, and why I'm still waiting on the dollar to come to this buy zone. If it is going to continue up, I'm expecting it to come to this buy zone first before they take off. Here's why. We pan back out to the higher time frame. Remember, we talked about market structure. How far did this pull back before it extended higher? Well, we pull our fib from the low to the high, and we see it retraced about 61%, right? It came down to the 618, and then it extended. How much has the market retraced from the recent extension that's happened? This is what I'm looking at now. We extended beyond the last high, right? And we've started to pull back, but we haven't even pulled back to the 38%, which a 38% is something that I would consider a shallow retracement. That means that the market is extremely bullish. It's making shallow retracements and it's just taking off. And we haven't even come down to the 38%, of this recent extension that's happened. And so this is why I believe this week is going to present, in the beginning of the week, is going to present a bearish scenario for the dollar. We're currently sitting at the top of a range that it broke out of, right? We have this range where this orange box is. We broke out of the range. We came back down to the top of the range, retested it, but didn't take off. And now we're starting to kind of like hang out right above this range. And so I'm expecting it to go a little further. I would like to see the dollar come down to at least the 38% before I would consider it taking off for a buy again, or, continuing up. So we have the 38%, which happens to be at an old high right here. I know I got a lot going on this screen, but that 38% happens to be right at a high or a level that, it could possibly react from. And then below the 38%, we have the 50% range, which happens to be the middle of the consolidation range, right? And also where some imbalance is, or where old market open gap is. And then the 618 is right below that, which is at another significant level where we got some highs here, right? We created a high, a low, high, low. And so that's what I'm looking for the dollar. I'm looking for the dollar to retrace to at least the 68%, which happens to be around this buy zone that I have marked up here. All right, and that's the first stop that I would expect. We ran above this high, even though this was a bullish move, and we've kind of like sold off, and we've come back out of the range, right? This was a range, and we've come back out of it. So with that being said, that means I'm going to be looking for buys. I'm leaning more towards bullishness on the euro. So let's go ahead and look at Euro USD. Before we do that, let's look at what the pound has been doing, or the pound versus euro versus the pound. So remember, we always go over uh, the euro dollar versus the pound, because this is how I determine if the euro is truly weak or truly strong. If it's, weak against the pound and it's weak against the dollar, that is a very strong sign for a sell on the euro versus the dollar. And as you all can see, we've broken out of this range, but we have not come back to retest it. And we're headed towards a buy zone that we marked up a while ago. Why does this line up with what's going on with the DXY? Well, if I'm expecting the DXY to go bearish and I'm expecting euro to go bullish, euro versus the pound happens to be lining up for a bullish situation, even if it's just short term. Even if it's a short term buy from this buy zone, the way everything is lining up and timing is looking like we're headed towards an area where it should be buying from to come back up to at least retest the bottom of the zone that it broke out of. Okay, so yes, the euro is weak against the pound right now, and it's selling off, which means the pound is either consolidating or going bullish, and it's going bullish, but so is the euro. All right, so with that being said, I see strong buys this week for the euro versus the dollar. Now, let's look at what happened last week. Let's look at the trade that I lost. Let me go ahead and turn on the execution mark so you guys can see where I entered and what happened. Okay, so last week, we took a live trade on the last Snipeathon call, and that hit, right? And then that was it for the week. I didn't trade again until the market opened up yesterday. And when the market opened up yesterday, which was right here on Sunday, I believed that it was gonna, continue up, but I got in a little too early because, let's see, I bought here at the bottom of the zone, and price continued down, stopped me out, and they ended up taking out this low here and coming down into pretty much a institutional candle, and we're currently reacting off of that. So this is the level of support that I'm banking on euro to uphold in the beginning of the week. So we started off the week bearish, opened up on Sunday, came down into pretty much an obvious area of support, and we also took out liquidity doing that here with this low. Right, so we took out this low, and then you see we had this bullish movement that came back up in the zone. Now let me pan back out again so you guys can see. All right, we broke back out of this range here. All right, so we're back at the top of this range. It's possible we could dip back down in it tonight, but here's what I'm looking at as far as where the logical area is to buy from. This is where I believe price is headed right now. All right, so this is where I believe price is headed, but this does not mean I'm going to take this trade. Reason being, timing. It's all about timing. And because we have the FOMC minutes, let me double check, on Wednesday, right? We have employment change tomorrow, and then we have FOMC minutes on Wednesday. It's a possibility they could range, leading up to that. But I need to see price come down to this buy zone that I just marked up. I need to see price come down to this buy zone. If it reacts from this buy zone and comes back up above this high here, and price holds above this high, then I am more comfortable with taking a buy beyond this high up into the second sell zone. Because remember, if I'm expecting the dollar to go bearish, I'm expecting euro to go bullish, and we also have euro versus the pound that happens to be falling down into a buy zone. All right, so that's the breakdown on the euro versus the dollar and what I see and what I'm waiting for this week. Now, say that doesn't happen and price continues down. As always, we just have to reassess. That's it. I have to reassess what's going on. Is it truly turning bearish? And I'll have a better understanding after price action has developed, because we could be coming back down to the middle of the consolidation. But if that does happen, I would not take another buy until we came back below this low to the bottom of the range here. And then I wouldn't turn bearish until price came below this level here and held. All right, so that's it for euro in the beginning of the week, what I'm expecting it to do. Like I said, I'm waiting on it to come down to this buy zone, react. If it reacts and happens to come above this high, I'm going to feel more comfortable with buy setups, taking it up beyond this high and up into the sell zone. So I'll let you guys just kind of look at the chart. Tell me what you guys see. Oh man, we have some more comments come in. Darius said, grateful, and the scripture that has resonated with my spirit is Psalm 28, verses 6 through 8. Okay, let's read that before I'm going to find that before we get off the call. Said, I had so much inspiration this weekend from spending quality time with my closest family to an illuminating Zoom lesson on yesterday. I feel restored eternally, thankful and divinely led. All praises to the Most High. All praises to the Most High, man. Let's actually, speaking of that Zoom that we had, let's go look at the United States dollar versus the Japan yen, because we did talk about this yesterday on the call, and it pretty much did, exactly what we talked about. Outside of it not retracing, right? Outside of it not retracing to this buy zone and this imbalance, I was saying if it did take off, I've seen it, filling this imbalance. And the United States dollar versus Japan yen really took off yesterday. But with me expecting the dollar to be weak, starting out the week, and as you can see, we starting to break down. We've even created structure on the smaller time frame where I believe this buy that happened is done. All right, so we created a high, but it's a lower high because it never came higher than this high or this high. And then on top of that, we broke market structure. So we created a high, a low, lower high here, and then we broke structure. And so now maybe price comes and retraces into, the areas that we talked about. But for tonight, especially let's double check the DXY. double check the dollar. Yeah, the dollar looks to be weakening right now. Yep, we had this run up right here, and now it's really starting to take off. And so I see the dollar coming to at least here. I'm not saying that the dollar is about to just take off and continue bearish, especially with the uncertainty in the market and speculators probably waiting on that FOMC meeting on Wednesday. We could very well create a range, but as far as the range that I see, this is around the area, I see it coming down to. And even just this little bit of movement here is going to translate to being a lot of movement, on the Japan yen, right? And it's retracing. Yeah. Let's look at it. Yeah, I think this is going bearish, especially with what I just seen on the DXY. So, do what you will with that information. There's always opportunities to trade. I don't trade the United States dollar versus the Japan yen, but based on what I'm seeing, nothing is guaranteed. But I mean, even from where it's at now, it looks like it could sell, from this area. It's headed up to the 50% right now, and then you have the 618 and the golden pocket here. But I see this going back down below this low, especially with this sell-off that just happened. I don't think that this is a pullback for it to go higher. This was the run here. This was the liquidity that was created. Let me So this was the liquidity that was created, and anybody that's looking at this, right? Anybody that's looking at this, they're buying, selling, but it's a lot of people buying here. It's a lot of people that believes that this is going to go higher, at this point, and they believe that based on what we see from the higher time frame, right? We had this pullback, and then the market took off. We took out liquidity down here, came up, created a high, retracement, and consolidated, holding pattern. So it's a lot of people that believed it was going to buy from this point. And so with that psychology, you see what happened. They even baited more buyers in with this run up. A lot of people got excited about that because finally, everybody that's been sitting in this, it finally started to take off. And then even on the retracement, buy the top of the breakout, break and retest, and then take everybody out. That is how I view the market. That's how I see the market. Liquidity, manipulation, take the liquidity out. I'll see the pound versus the yen finally took off and created a higher high. Nice. Yeah. The pound versus the yen, it's a confusing pair, man. The market structure is very, very strange and unpredictable. It's not something that I really took the time to learn. But there's a lot of opportunity, a lot of pips, a lot of opportunity for pips in Japan in the pound versus the yen, because when it moves, it really moves. It takes off. So I'm pretty sure the pound versus the Australian dollar is even more bullish. I see last week we marked up that buy zone and it did come back down into the buy zone right here. Took off. See what we got with the Australian dollar. This was another one that we went over last week. We were waiting for it to come up to the sell zone, and it did. It came up to the sell zone and it reacted right here. And that sold off for, let's see, how many pips did that move give? It's about almost a 30 pip move. So it reacted for about 30 pips before it took off again. So again, even the Australian dollar, right? You have the Australian as the base and then United States dollar as the quote. As you all know, the first currency in the pair determines the direction, but that's the, determining currency. So if the United States dollar is weak, that means that because the Australian dollar is the first currency in the pair, that it should be strong and we should see bullishness. And even on the Australian dollar, we have a lot of imbalance to fill here. And we've broken back above a level or an area that the market should have sold off from, but it didn't. And so now we're in this zone. We came above this high. And so if price comes back up above here and it holds, now you're looking at an imbalance fill here. Now you're looking at an opportunity for buy setups for the rest of this imbalance to fill. Now, trading it involves risk, right? And past results do not guarantee future profits, but this is what I see, especially with what we see going on with the United States dollar. But time will tell. This is one of those weeks where price has to go to a certain level and hold above that level, and then that increases the chances of a successful trade setup. Nothing right off the bat. Like last week, we were able to get in for a live trade because the opportunity was there. It was right there. That's the way it works. You're not going to see a trade every day. Sometimes you might not be able to trade depending on how you trade. You may not see a setup that looks good to you for a whole week, a whole 2 weeks, a whole 3 weeks, depending on what the market does. So that's another gem I wanted to drop for you guys, is that you don't have to trade every day, and you might not see a setup, for a while, and it's okay. If time goes by and the market is just not showing you what you would like to see based on how you trade, right? Don't force anything that is outside of what you know and what you understand and what you like to see. If you're going to lose a trade that you had confidence in, and that, you stuck to all your rules and it was doing what you like to see the market do, versus I'm going to take this chance. It's not doing exactly what I want to see, but, maybe those losses are those, you don't want those kind of losses, and you don't want those kind of wins either, because there's no consistency behind that. It's not something that is sustainable, long term. But yeah, that's pretty much it, guys. I can look at really quick. We always check out cryptocurrency. Ripple seems to still be headed down. Like we said, still looking at that 83 to 95 cent range. but it's starting to form like a reversal pattern. If we create a shoulder here and then come back above this high, there's a possibility that we could be starting another run. But we gotta clear this high here for me to even consider a possible run. Bitcoin, same thing. Price has to come back above 82,000 and hold above 82,000 before I even consider it to be making another run. Yep. So as of now, bull or bearish on Bitcoin, bearish on Ripple. And I still see Bitcoin going to in between 31,000 and 45,000. Khalil said, "Thank you for sharing that." Oh yeah, no, most definitely, man, most definitely, no problem. Where I have made mistakes, in developing my strategy and just developing the way that I trade, it's really I believe it's a blessing to have somebody that's made mistakes and a lot of mistakes, and if you have the spirit to um, be able to listen, you know what I mean, and just take my word for it. Take my word for the mistakes that I've made. I think it'll serve you well, and it'll shorten your path to success. You won't have to, you know, be in it as long, to start seeing some real returns from it as somebody who didn't always listen, to my mentor, didn't always listen to just, going off of, but you gotta battle those emotions as well. You can have the information, you can have the knowledge, you can have the mentor, you can have the mentor telling you, hey, don't do this, X, Y, and Z. This is what happened to me. This is how I blew my account. And it's a whole different ball game when you got your own money in there and you in there and you making decisions day to day. And you see the possibility. It's that potential. It's that potential to make money. It's the potential to make money that's going to get you, and that can get you if you don't get a hold on it, in the beginning. So that's going to be the biggest battle for anybody. Anybody that's trading right now. The biggest battle is going to be you and actually sticking to what it is that you said you were going to do. If you have a certain strategy that you follow and you have rules, you're going to break those rules. You're going to break those rules and you're going to learn, you're going to get spanked from breaking those rules. And it all depends on how fast are you going to learn and stop breaking your rules, but that's it, man. This is it. But yeah, y'all, that wraps it up. It's 9:45. This is a quick call. Pretty much got everything. It's simple. We just waiting right now. Just waiting on price to get to certain levels and hold above or below those levels before we, or before I uh, make any setups or call anything. Let's say anything for sure. We got that FOMC meeting on Wednesday, and then we have some employment news coming out tomorrow for the United States dollar. But that's it. That wraps it up for the Snipeathon 5K weekly update. This is week 21. I appreciate, as always, everybody coming to the call, supporting, following, learning, asking questions. Everybody that participates, I appreciate y'all. And anybody that is just here watching, not saying anything, I appreciate y'all as well. And I really hope that y'all get value when y'all come to these calls. And I want y'all to know it is very important that y'all know any blessings that come from coming to this call, anything that you hear that serves you well, in whether it's trading or just something I say about life. I give all praises of anything good that comes from me to the Most High. It's very important for y'all to know that I'm just a vessel. I'm just a vessel. Anything that comes good that comes from me comes from the Most High God. And that's it. That is it. Y'all enjoy the rest of the week. Be safe in the markets. As always, I will keep you all updated in the chats, and y'all enjoy the rest of y'all evening. Remember, becoming a master trader isn't about mastering the markets as much as it is about mastering yourself. Discipline before profits, faith over everything. Love y'all. Have a good night. Shalom.